depends on the Windows computer. It's a minute behind for some reason. Hello and welcome to another episode of Daily Market Mastery with me, Christian Rauchenwald, on this sunny Wednesday afternoon. I hope you all had a great start into the new week so far. As always, before we jump into the markets and my portfolio, let's get the usual disclaimer out of the way. Everything that I share in this live stream / video is my personal opinion and in no way financial or professional advice of any kind. You should always do your own research, consult certified professionals, draw your own conclusions, and make your own decisions. Besides that, as always, all the tools that I'm using, as flawed as they sometimes may be, so the broker, the charting software, the strategy I'm following, and so on, are all linked in the video description down below. And the one thing I truly recommend you check out if you haven't done so is the Elliott Wave Principle or Elliott Wave Theory. You can read this wonderful book online for free when you use the link that's down below, and you can use the same link to also get yourself a physical copy. Now, with all of that out of the way, we can jump into the portfolio, and I can hide the message here. And as we can see, we have another break-even start into the day. Our portfolio is still unchanged. We still have our March 28 $37 call options against our 600 GameStop shares, plus a few other quite smaller, or in comparison, quite smaller positions, so that are not that relevant. That said, if we look into GameStop, as we covered the last couple of days, we are now in the progress of finishing this potential wave C, in my opinion. That could already be finished here or could have another push. As I mentioned yesterday, I believe that we will get to see the 78.6 retracement at 22.73 before we go further up. And considering that we are looking at an 8-hour chart, we obviously have to wait and see. Hi, Jerry. Thanks for saying or showing that you're here. So we'll just have to wait and see for this to play out. In the meantime, once the market opens in 2 minutes, we will check if we can roll our current call options for a decent amount, or maybe even roll them down to potentially even the 30 strike price if we can do so for a decent amount of premium. That said, not sure if we get the Barnes & Noble Education Inc. chart to work. It doesn't right now, doesn't even show a price here. On here the price is 905. Okay, so I still have not managed to sort out the charting or data feed issues. That I have a ticket open with Motivewave already, so with the creator of the charting software I'm using. And yeah, but eventually we'll figure it out. Thankfully, our positions are not that big that it is that much of an issue for everything else but GameStop. Again, if we open the chart like this, it miraculously works. One has to say, if we break the 831 here, then obviously we would have to reconsider our labeling. I cannot make it bigger because then it will load again and it will then be stuck, yeah. But basically we have a 5-wave impulse coming up here, a 3-way corrective move followed by what appears to be a 5-wave diagonal move here, and which means this correction here could technically just be correcting the diagonal before we go further up, or this entire 5-wave, 3-wave, 5-wave move is a corrective move, and we're now seeing another impulse further down. So if we were to break 831, we have to reevaluate. There's, however, also the starting point of this impulse, which would serve as our true stop loss, because it's also possible that this is in some form part of the correction of that bigger impulse. So for now, especially since our exposure is not that big, we're still going to just hold. And but as said, if we break 831, that would be the point to in quotes start to worry or at least reevaluate. Which also means right now that an entry considering this retracement might be worth the risk, considering that one could put the stop loss at 831, so there's less than 10% risk with potential 50 or more % upside if this is indeed diagonal correction next impulse wave. Yeah. Moving on, yeah, close the chart. Immersion unchanged. We believe that we will get to see at least the 771, but potentially the 61.8 retracement at 669. So I wouldn't be surprised if we get a couple more days, or in this case weeks actually, we're looking on a weekly chart of downward movement to hit the level here before we finally resume our journey upwards. Oh, sorry guys. So that, however, assumes that the correction will turn around here, which is the most likely candidate in this case that's left, since we made it through the 38.2 retracement. That's the next most likely candidate. If this one falls, then we have to consider if maybe the 78.6 level will be possible or not. Either way, we're going to hold our small immersion position, and if we earn enough premium, maybe even add to it. Costs, we're a little bit clueless at the moment. I've mentioned it, so I'm fairly certain that our wave 2 ends here, and we should start to develop our wave 3, but one also has to see that this visually appears to be a 3-wave move when we actually would expect a 5-wave move to develop. If we break the level here around 370, 380, we would have to, like reevaluate everything. As long as we stay above 370, 380, so the low that we had here, I think we are still good in quotes. And yeah, so cost, our position is also not that big, so same thing applies. NEO, we are waiting to see if we finally actually finish the correction. I've called this one wrong in quotes here, or yeah, somewhere here. So in both cases, it bounced, however, then continued the trend. Therefore, right now I'm just waiting. Stop loss right now would need to be at 363 because there our pattern or assumption that wave 4 actually ended here is over or is invalid or becomes invalid. As long as we are above 363, I still believe we have a nice 1, 2, 3, 4, 5 impulse followed by a weird corrective wave, and should now get our next our next impulsive wave. Yeah, I don't know why I'm always getting sleepy when I'm looking at charts. Yeah, maybe it's something calming, all the red. Anyway, that pretty much sums up the portfolio. Markets are open, so we can now check if it's worth to roll our or my existing March 28, 37. So we would have to buy back those, and we could then sell, for example, we would go for April 11, no, April 17, even 43 days. However, there we would not go for $30 because that would be likely not work out, because again, if we circle back to GameStop, well, we expect the further drawdown here. After that, we expect the 5th wave, and so the $30 mark puts our shares at risk, which I'm kind of okay if they get called away. But if I can avoid it and roll them further and up over time, I obviously would prefer to do that. So theoretically, if we were to switch them for the $30 April 17, we would be able to pocket $600, but we also would give up $3,500 potential profit if GameStop were to go to 37 by the time. So yeah. Or actually $4,200 potential profit. So that's not necessarily a level we want to go for. Now, keeping at the 37 doesn't seem to make sense, because we can see, even if we roll it out from our current, how many days do we have left? March 28, 23 to an astonishing 43 days. So even by rolling it out for 3 weeks, right now, based on the market prices, we would only be able to pocket $8. So that doesn't make sense. Obviously, which means rolling them to 40 would actually give us a bigger premium. So we would roll them up. But overall, we would pocket $120 minus fees, which is not that great. Rolling them to 35, on the other hand, might be worth the trouble. We would get $420, no, $240. Yeah, I don't think that makes sense. So, because on the other hand, if we wait for our calls to expire, so if we right now check something 60, so 300, I'm honestly not sure if that makes sense to roll them that far. So this way we would April 17 and $35 strike price. So we would roll them out till here. And as far as the price goes down to 35 from currently 37, so April 17, so possible, but is it worth doing for April 17, $35? So if we can get that to trigger for $300 total, we're gonna do it. Submit order.
Order filled.
Oh, that was now 1. Okay, and that actually filled. I forgot to change the quantity. Maybe my luck even. So we rolled one of them to April 17 and 35. So sell those, and March 28, buy back the 37. And now we want April 17, 35. So let's see if we can, let's make 6 and see if we can get them even for more. So buy back the March 28, $37 calls, this one, and obviously 5 because one we already switched, and sell the April 17, $35 call. Yeah, let's submit the order. And let's see if we can get it for $75 per. No. 70. Okay. 60. Yeah, now price developed a little bit against us here, so but we'll see 55, and otherwise we'll submit them for 50 and see if they trigger.
Order partially filled.
Yeah, for 50 they went through instantly. So we rolled our options now out for April 17, $35 call. So we can move this line here to April 17. Roughly here. So now our calls are here. And with that, we also freed up a little bit of cash. There is some euro balance that we have to cancel out. So we're going to do this real quick. Close all, or actually vice versa. Yeah, so cancel out the balance. And we actually will keep the balance for now and not use it. So we want to build up some extra caution, because recently one of the problems has been that very often we simply see some potential trades, like for example Frontline and so on, but we don't have any spare cash to do anything about it. And so I feel like for the next couple of weeks or potentially months, it's now again we have 40 something days to expiration. Yeah. So April 17th, as said, is 43 days. For that period, we will check whenever we can roll them and in consideration with what the chart shows us. But whenever we can roll or write our calls, we want to do so in a way that accumulates more cash for us, so that when we see a new opportunity, we can actually use it to trade that as well. So therefore, we will not deploy the little bit of premium that we just earned. Yeah, so with that, we have that part. Let's look a little bit crypto side. So Bitcoin, there is the option, as said, correction could have finished here, and we're now getting to see the next waves up with the minimum target at 122,000 per Bitcoin, maximum target somewhere higher. There's also the option, this is just beginning of the correction, but for that we would have to also label the bigger picture, which we're not going to do. Algorand in a very similar situation, wave 4 could be finished here. So 1, 2, 3, do we have a labeling there? No, we don't. So 1, 2, 3, 4. It is also, however, still possible that there's another push to finish wave 4. From the looks of it, I believe that it's finished 1, 2, 3, 4, 5, and now we're seeing the next 1, 2, 3, 4, 5 develop. But again, no guarantees on that, so there is a little bit more downside. Stop loss would need to be somewhere here at 0.10 cents, which means there is a little bit more than 50% risk. However, the upside is also more than 100%. So the minimum target is at 61.92 cents. HNT finally reaches the level, so a little bit lower than we were here, to potentially finish this correction. So while there is more room and we could even get to see the 78.6 retracement in this whole move here, I believe that we're looking at a weekly chart within the next couple of weeks and months. So before the end of the year, this correction should be officially over and we should start to see further upwards development, or the entire pattern will eventually become invalid. Storage or Storj, there, 1 second, we don't have a fully that we have to relabel. I mentioned it yesterday. I think XRP should trade theoretically a little bit more sideways and down to finish a correction. Ideally hit 161, the 38.2 retracement before it triggers the next wave. And XYO hit finally now the minimum target for the second part of the correction. So if this were A, B, and C, although there's more room so that we could also touch the bottom of the so-called base channel, but eventually after that we should get our fifth wave up. So definitely also doesn't hurt to slowly accumulate. However, risk reward is not that great because the stop loss would need to be at around half a cent, as we can see here, that 0.2, which means, yeah, it's also like 50% risk. And the upside, on the other hand, is, however, 400% or more. So, yeah, like, I mean, it's definitely not one of the worst things to in terms of risk reward ratio, but it's also not one of the best we've ever seen. Amazon, we will eventually look into deeper. I covered it yesterday, so check out yesterday's episode for a little bit more insight about that. Frontline or SMCI, do we get a chart? Guess we don't. Yeah, it doesn't look like we get one. Frontline, we also don't get a chart, so bummer. NVIDIA, we get a chart. Yeah, but we haven't labeled anything here. The big question is, as I said, are we currently retracing this entire move? In which case we can see our most likely target would actually be here at 55.57, which is a more than 50% drop for NVIDIA, potentially also the 61. But if we look at this 1, 2, 3, 4, or 1, 2, 3, 4, and then a very short fifth wave, yeah. So then I would say if we can correct the entire move, we will correct down into the area of 55, 57 to worst case 40, 65, which would align with a potential 1, 2, 3, 4, 5. Yeah. So then area of wave 4 would be at the 50% retracement. So if that's the case, yeah, it's also possible that we just are correcting the smaller move here and still getting some more upside. But from the way it looks, actually, we have to start to consider the option that we are going to retrace into the area here before we potentially see the next upward movement. That's not considering the option that we're retracing an even bigger move, yeah, so which would be then basically be devastating, because then potentially our target area would be here in the $10 area. So a 90% drop. But yeah, like, time will tell, and we'll eventually jump into it and label it a little bit more detailed. There are no requests in the chat to look at something specifics, and I also don't know what else I would want to look at today. For us, obviously, for me, most important is how GameStop develops, because of the covered calls that I keep writing against the shares and kind of like want to roll out without losing the shares. I feel like, yeah, we didn't make the best and not the worst deal today to roll them out again by basically 3 weeks for another $300 roughly worth in cash, which is, so we have 600 shares. I'm so bad at math, yeah. 600 shares at with a market value of 14,000 roughly. So 10% are 1,400. So 1% are, let's round up, 150. So basically we got a 2% return today on our investment in option premium for rolling them out by another 3 weeks. Obviously that now means we're waiting again for the expiration to basically go down by 10 days at least, so into the area of 20 to 35 days to then roll them out again. Yeah, so ideally, basically, that means we made a 2% return. Obviously, if the shares keep dropping in value, it doesn't compensate for what we would lose on the shares. But if the shares stay stable or eventually move up, it adds to the profit that we make from the shares alone. Anyway, with all of that said, I think we're going to call it a day here. As said, I'm going to work on getting the chart loading or charting issue that we have with some of the stocks for some reason worked out. Yeah, unfortunately, all I can do is basically bother certain support teams, and I'm sure eventually we'll figure out, and it's going to be something super minor, and I'm going to be, why didn't I see this? But until then, it's going to be a little bit more frustrating to actually label the chart. And yeah, until then, feel free, as said, check out, let's switch here. So check out the Elliott Wave Principle yourself. You can read this book for free, and it's been yeah, like, I mean, I'm 38 years on this planet now, and it's been the most accurate trading strategy that I ever found. So also, while it looks very simple, it's actually fairly complex, and also has room for error. There's no strategy that will always tell you with 100% accuracy what to do. But in my opinion, it got me, yeah, my biggest winning trades, and helped me get out of some of my losing trades at the right time. So yeah, feel free to do that. Anyway, thanks for stopping by. Have a great rest of the day. See you all tomorrow with another episode of Daily Market Mastery. Till then, bye-bye.